Welcome back to Business Morning, this the Wednesday, the 20th of December. Let's dive into the mutual funds market. And oftentimes we talk about stocks and bonds and what have you. Mutual funds basically is a portfolio put together by some folks who call themselves fund managers or whatever, asset managers, like Olabelgero, for example, and they put some stocks and whatever, try to select that and try to help you play the market so that you don't get bonds. That means they're the professionals, so they're the one taking the heat off you, but it comes at a cost. It's not free, so, but it gives you some returns as well. Nothing comes free. Let's bring Belgero into the conversation. As the Managing Director and Chief Executive Officer at Afrinvest Asset Management. Good morning. It's good to have you here. It's been a very, we can have a handshake to the market. Yes. It's been a very nice year. You folks made money. So
our clients made money.
Your clients made money. Yeah. When your clients made money, you make money.
We're happy for our clients.
Anyway, we're happy. You're happy for your clients. Yeah. Happy is the one who delivers happy clients. That's what it means. That's what it's all about. That's why you are in the business of managed funds. So you're managing people's portfolio. Yeah. So the strong equities market in 2017 and the fixed income, you think, is played, and very good currency market as well, have played into mutual funds. Yes or no?
Yeah, definitely. Thank you for having me again. Like you said, 2017 has been a very good year for investment in Nigeria. Practically all the managed funds recorded very good returns, well above inflation rate. So you got real return on investments in 2017 from fixed income bonds, funds, to money market funds, equities, almost everything is...
Above interest rate, also above inflation?
Also above inflation, yes.
What a nice year. What a very nice year. I wish I'm part of that. You folks make close to 20%, right? In terms of real return, 20%? Is it safe to say?
Yeah, for the equities portfolio, if you look at all the equity mutual funds in the Nigerian capital market, I don't think anyone has done less than 30% return in 2017. We are, at Afrinvest, we have an equity fund that is called the Afrinvest Equity Fund. We're at about 41% return year to date.
And what's the size of that?
It's about 500 million
portfolio.
Portfolio.
Interesting. But if you look at, I want to let's go straight into the new year. Our foreign exchange market was good news for you, fund managers this year. Do you think it will remain an icing on the cake for you in 2018?
We hope so. 2017 didn't start as great. You remember that market was a bit depressed until about the end of first quarter when the I&E window came on board, and it's been because of the semi-easing of the foreign exchange policy. It's been very good for the market. So we think that the trend will continue. Coupled with the fact that oil prices is going up, production for us is still is good. We're above the 2.2 million barrels per day and all of that. So we think that it will be a good year, 2018.
How easy, or how do you build a portfolio, for example? And how do you, once you want to build it, how do you select your assets? What are the key considerations for a fund manager?
Okay, it may be necessary for me to explain what a managed fund is. It basically is pulling funds of different investors together into a fund that is then put in a portfolio to meet the expectation of that category of investors. So you could have the young and aggressive investors who may want to go into equity funds. You may have the risk conservative investors who may just want money market returns and all of that. So it depends on what your clients are looking at. But the beauty of managed fund, which you may also call mutual funds, is that it reduces the individual risk. You know, because by pulling so many people together, their funds together, you can then diversify across the instrument in whatever asset class you have chosen. So the So you have equity fund, you have money market, you have fixed income. You sometimes have balanced funds, which is a mixture of equities and money market. There are also some specialized managed funds like infrastructure and all of that. So whichever one you go to will depend on the asset you choose under each of those categories will depend on what your aspirations, what your target is for the fund.
Who is in the market at the moment? Who wants managed funds? Is it the big guys, the usual elite? Is it the middle class, like yourself, who has a lot of money to put aside? Or the young guys who are in the telecom, whatever industry, who are into all of that, and they feel that, look, I just need to buy something very quickly because I want to get in on the game?
Well, interestingly, unlike in the past, almost every category of investors is in the market now. You have the high net worth individuals who you would give customized services to, of course. But you see a lot of us, fund managers, a lot of us are targeting the retail client. Before now, for some funds, you have minimum entry being about 50,000 naira or 100,000 or more. But right now, we're going as retail as 5,000. We've just launched a money market fund, the AfriInvest Bluetooth fund, and the minimum you need to subscribe is 5,000 naira. So you're making it more affordable because the people out there want to invest to secure their tomorrow.
5,000 naira, Nigeria Savings Bond, which the debt office also has on the street, is 5,000. So I keep asking the question. When folks says Nigerians don't have money, if I may use that balance, which is basically a street expression, Nigerians don't have money. But now you're bringing mutual funds from 100,000, 50,000 down to 5,000 as a subscription, and folks are still buying. And they're interested, aren't they?
Yeah, of course they're interested.
So it means there is money.
Well, it's relative, but of course, no matter what situation, I mean, we try to, as a community, the investment, the capital market operators, we try to do financial literacy and